normalization, again, of the president's speech, his behavior, his tweets. At some point, there's going to be a straw that breaks this camel's back. We are not dealing with something that is small scale in nature. If we have a full scale trade war with China, and then he decides to put tariffs on European and Japanese cars, you know, Japan and South Korea are in the midst of a trade war. South Korea just pulled back its intelligence sharing agreement with Japan. There are things going on all over the world that could crack the global economy, and people just seem to be whistling past the graveyard almost every day.
Does this remind you of the setup going into last year's final quarter and final back half
in some
of the year?
respects,
I mean,
yeah.
in terms of we're ramping up in the trade tensions. We're at a point now where the commentary on conference calls will be increasingly, pointing to trade and global growth as an issue. And that set us up 1 year ago for a huge decline in the fourth quarter of the year.
Yeah, and there were some other issues as well.
I mean, the Fed message was a huge one, and then Fed seems out of the way at this point.
Out of the way at this point.
Fair, yeah.
But one thing I want to say about the Fed, you know, they talked, and Steve Leisman did a great job about encapsulating this morning, about the 95 and 98 parallels to what the Fed may do with respect to altering its policy. In 1995, the Fed raised rates enough that you had the peso crisis in Mexico, the bankruptcy of Orange County, California, and a major money market fund that broke the buck. They had to turn on a dime and reverse course. In 97 and 98, you had the Asian currency crisis, Russia, and long-term capital. Both of these were effectively financial market liquidity crises. This is not. This is a fundamental economic problem for the world. It's not the type of thing that lower interest rates and more liquidity will help.
That's what I want to ask. I was going to ask that very question to Michael Farr. Who was just trying to get in there? I'm sorry. Who was that?
There was Jack. I just had a point
Jack.
on that.
Yeah, go.
And that is, I think that given the skewed nature of the Fed's effectiveness, I think what I worry about is this broader adoption of modern monetary theory that maybe not in this country, but the fact that we've been able to print roughly $13 trillion of paper globally and buy bonds without much inflation could potentially spill over into fiscal policy. And I think if we see it anywhere, we'll likely see it in Japan first. And that could be an early warning that that could spread.
So, Michael, let me let you, I think we're running out of time here, but I am curious as to what lowering interest rates could do for a business community that does not seem to want to invest, and it doesn't seem that the impediment to investment is the price of money.
Okay, so I think you just answered your own question, right? I mean, it's already cheap as it can be. If you make it a little bit cheaper, nobody's using it any differently than they used it 2 years ago. They're buying some stock buybacks, but they're not doing the sort of expansionary things you'd hope that they do. But what Ron has just said and what Jack has just said are two very important things. I think that we're seeing a serious economic turn and some real problems that are building here. We are reacting in a very complacent way. And to me, I understand Jack's point about Japan, but to me, the thing you have to watch right here is the U.S. consumer. U.S. consumer spending has, I think, that has sustained us. That's been keeping this bull market going. Consumer sentiment has started to drop. If that consumer spending starts to trend lower, then you're going to see, I think, our economic future get even murkier. This is a difficult time, and I'm sorry, Mr. President, your tweets aren't helping today.
Confidence is a very fragile thing, folks, right?
Yeah, and listen, the retailers that are doing well are discount and value retailers. You know, that comes at the end of a cycle and through the bottom of a cycle, not when we're starting on the uptick. So I think that's, some people may be misinterpreting the strength of some of the earnings that we've gotten from retailers like Target and Walmart and others who typically aren't on the high end of the pricing spectrum.
All right. Have a good weekend, gentlemen.
Thank you. I think I'm here for a while.
Oh, yeah, I think you're here. I think you're coming back, right?
I think.
Michael, thanks very much. You didn't even mention Johnson & Johnson.
Tyler.
Jack Ablin, we appreciate it as well.
Just doing great, doing great. Bye, J&J.
I was going to ask you what to do with your money, but I know the answer. Johnson & Johnson. Thanks, guys.
We've got a news alert on the small business reaction to the trade war. Let's go to Kate Rogers for the details on that. Kate?
Hey, Kelly. Advocacy group, the Small Business and Entrepreneurship Council's President and CEO Karen Kerrigan out with a statement to CNBC that reads in part the trade war with China was slowly chipping away at small business confidence, and these unprecedented actions tweeted by President Trump, if followed through on, will only accelerate the downturn in business investment and confidence. It will then hurt consumer sentiment. She went on to say China continues to goose the president with their retaliatory actions and words, and sometimes their bark is stronger than the actual bite. A more sober response to China would ultimately show who's in charge. So a small business group here obviously weighing in, saying that this will take confidence down a leg lower if this continues. Guys, back over to you.
Kate, thank you. Kate Rogers. Coming up, sneaker stocks getting kicked while they're down today. First, Foot Locker missing on earnings and the president's comments on trade. So is now the time to buy these stocks, or should you run from them? We've got that story and all the market moves covered for you. Stay with us on Power Lunch.
This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you free clones of your best employees. What's that? Oh, no cloning. But there are online skills tests.
Using Indeed skills tests reduces time to hire by 27% on average. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Phew! Currys PC World Mega Deals are hot stuff. You can save up to £150 on Samsung fridge freezers, all with a soothing 5-year guarantee. Starting from just $379 for the RB29. Or upgrade to an American-style model with £150 off the RS8000. And chill in the heat with its water and ice dispenser. A hot mega deal for a cool $999 at Currys PC World.
Everyone wants a smooth running home so that they can spend more time enjoying it. The British Gas app allows you to do just that, because with a touch of a finger, you could quickly pay your bill or book in a boiler service, leaving you more time to fire up the barbecue or just relax with a good book. Manage your home account and more all in one place. Download the British Gas app from the App Store or Google Play today.
With a welcome bonus from the no annual fee British Airways American Express credit card, your next getaway's not far away. So whether it's welcome to drifting down the canals of Amsterdam or bienvenue to midnight strolls in Paris, say welcome to a European adventure. Spend £1,000 in your first 3 months of card membership and get $5,000 bonus Avios. That's enough to get away to Europe sooner. Search BA Amex to find out more. Representative 22.9% APR variable. Applicants must be 18 years or older, subject to approval. Terms, taxes, fees and carrier charges apply.
Welcome back. The trade war hitting every pocket of this market. Shares of Foot Locker are tanking today after reporting disappointing earnings. Foot Locker isn't the only sneaker company feeling the pain. Skechers, Under Armour, Nike, Adidas, all in the red as additional tariffs loom in the escalating trade war. Should investors steer clear from these sneaker names? Joining us now is Aaron Murphy, Senior Research Analyst at Piper Jaffray. Aaron, great to have you with us.
Thanks for having me on.
What is the reality of the exposure of these companies to tariffs?
Yeah, I think it varies by company. I mean, from our perspective, the ones that are best protected are truly companies like a Nike, where when you look at what they're actually importing into the U.S., it's under 10% to China directly. Vietnam is a much bigger market for them from a sourcing perspective. So they kind of stand out as an outlier. The companies that have more immediate impact, Foot Locker has a decent private label business. We do believe a decent portion is sourced from China directly. And then as you look across, outside of athletic footwear, it's companies like Steve Madden and G3, which have a disproportionate amount of their production, well over 60% in China.
Wow. Okay, so let's talk Foot Locker right now, because obviously the earnings were disappointing, but it's feeling another leg lower based on the trade wars, Aaron. And I'm wondering how much of this is the terrible quarter, how much of this is the trade war, and is this warranted? 17% decline in one day.
Sure. So I do think the majority of their decline today is much more on some of the structural challenges of their business. When you look at what's happening in the athletic market overall, it's still a really healthy market. Just more and more of the trends are happening and the transactions are happening on DTC. So vendors like Nike, like Adi that have really strong
consumer.
Correct. Mm-hmm. And so have strong online businesses and can engage consumers that way. And it's really putting pressure on more of the traditional retailers that sell those brands. So I think at the core, that's what's driving the majority of the decline. Also, the tariffs don't help, the tariff rhetoric. I do think that's probably 4% potential incremental risk to numbers that's not in their stock today.
You've got a hold on this. You cut the price target down to 33. It's now trading at 34.86. Why not put a sell on it?
It's a good question. Look, the stock has really come in quite a bit. I think we're kind of waiting to see if they can have any momentum in the near term from a product perspective. On the conference call, they were pretty positive on the third quarter. They maintained their guidance up mid-single-digit comp for the third quarter based on what they're seeing down the pipeline. We're going to track to see how consumers are responding to that newness at retail and if it makes a difference. But our longer-term bias is a little bit cautious at this point.
In your model and your EPS estimates for Foot Locker, Aaron, do you take out, or what is the impact of that private label business in China? And if they have to pay tariffs, then what happens to that?
Sure. So we took our number for next year, which you'll see more of the impact for, to 478. Our perspective is that if we move to 10%, or I guess we are moving to 10%, and if they can't mitigate that, it's probably about 4% decline from earnings from there. So that's probably, still to come. And it's not in their estimates at this point, nor in our model.
In your top stock in your coverage universe?
Our top stock, we continue to like Nike and VF. Those are the two names we'd be looking at for safety in this kind of turbulent times.
Aaron, thanks for your time. Aaron Murphy, Piper Jaffray.
Thank you so much.
Well, stocks getting slammed on what seems to be a major escalation in the trade war between the United States and China. The Dow now down 508 points. Caught in the middle are automakers targeted by China in this latest round of tariffs. What it could mean for those stocks, and it's not really positive, coming up on Our Lunch.
We don't sell annuities.
This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
You're in charge of hiring, and Indeed has solutions, like sponsored jobs, which increase the visibility of your post in search results to make sure the right candidates find you faster. And we give you this toy monkey, who will bang its cymbals when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are sponsored jobs.
Sponsored jobs receive up to 5 times more clicks than normal job posts. Visit Indeed.com/redeem today and get a free sponsored job upgrade on your first posting. Terms, conditions and exclusions apply.
I didn't choose you. You chose me. When you broke from the crowd and pawed at my knee, soon you'll be feeling right at home. You'll be a bit unsure, but you're free to roam. What's good to chew? What's nice to nibble? Wet food, dry food, tin food, kibble? You might sometimes be cheeky, not always wise, but I know I found love in those puppy dog eyes. Join the free VIP Puppy Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/puppy club or join in store. T's and C's apply.
Phew! Currys PC World Mega Deals are hot stuff. You can save up to £150 on Samsung fridge freezers, all with a soothing 5-year guarantee. Starting from just $379 for the RB29. Or upgrade to an American-style model with £150 off the RS8000 and chill in the heat with its water and ice dispenser. A hot mega deal for a cool $9.99 at Currys PC World.
At Asda, save 25% on a great range of wines when you mix and match any 6 bottles or more. Bring it home with Asda. Save money, live better. Selected lines in selected stores, 75 centilitre and 1.5 litre bottles, £4 and above. Excludes gift sets, fortified and meal deal wines. In store only. Excludes Scotland. Ends 26th of August 2019. Drink aware.
Silence the squawk. Find brand new cars ready to drive away today with Auto Trader.
Welcome back to Power Lunch. I'm Mike Santoli at the New York Stock Exchange. GM and Ford in the danger zone as the U.S.-China trade war escalates again today. Those stocks tumbling after China announced it would resume a 25% tariff on U.S. autos beginning in December. Let's bring in your Trading Nation team, Bill Baruch of Blue Line Futures and Steve Chevron of Federated Investors. Bill, this has been a group under pressure already. U.S. automakers, obviously some concerns about where we are in the auto cycle, and then obviously exposure to trade flows in general. How do you see the stock set up right now?
There is too much uncertainty around the auto sector, especially in the U.S., to call this or any of these stocks a buy right now. But let's take a look at GM. Now, you have a trend line higher going back from 2015, August 2015, and this could bring some good value down at $32. But, as well, there's an interesting way to look at it. And, we'll focus on autos more broadly. You can take a look at the ETF RXI. Now, Toyota is the number 3 name in there. And then it's surrounded by Amazon, McDonald's, and Home Depot. And that gives you a way to diversify without idiosyncratic risk. And Ford and GM are 2% of that ETF. Now, that has a good support line coming in at 112, as the chart would show, and the 200-day moving averages down there. So I think that's a good place to look to get some exposure in autos down at 112.
Yeah, it does seem to point up, Steve, though, that the auto sector is not necessarily benefiting, at least the stocks are not benefiting from a very strong U.S. consumer and very low interest rates in the way you might expect from previous cycles. The stocks, however, do look pretty cheap based on current earnings. So where does that leave you?
Yeah, I think you got to be cognizant of the fact that both housing and autos are doing maybe a little bit less well than you would think, given low unemployment, strong wage growth, and low rates. I think when you think about the tariff issue here, this morning's announcement's not a big deal. The bulk of their business is done in the United States. The bigger deal might be what comes this afternoon, because they're importing a lot of goods, steel, aluminum. It's the import tariffs that are really hurting this group, not so much the export tariffs into China.
Yeah, and of course we did also have the president exhorting U.S. companies to kind of disengage from China, and these companies are very much entrenched there. So we'll have to see how that all plays out. Bill and Steve, thank you very much. For more Trading Nation, head to our website or follow us on Twitter at Trading Nation. Kelly, back over to you.
Michael, thanks. Coming up, the carnage continues. Take a look at the 11 S&P sectors, all lower as stocks sell off amid trade escalation with China today. The tech sector is the day's biggest laggard, and it is led down by the chip stocks, which are caught right smack in the middle of this trade war. AMD, Nvidia, Broadcom, Lam Research, all sinking more than 4.5%. We're tracking all of that volatility and turmoil right here on Power Lunch. Stay with us.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
There's a classic investment thesis called the Dow theory. It says that transportation stocks can either confirm or deny a broader market trend. But it's important to remember that transports can be sensitive to changes in oil prices and other market influences. So don't rely exclusively on this theory when making an investment decision. I'm Randy Frederick, and Schwab is the better place for traders.
Okay. This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
You're in charge of hiring, and Indeed has solutions, like our library of job description templates which are free and easy to customize. We also give you the pigeon of perception, who only coos when you find the perfect CV, or when he's hungry. Okay, no pigeon then, but there are free job descriptions.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/start today to use our library of completely free job description templates. Terms and conditions apply.
Make sure you're uni-ready with our huge range of practical essentials and home-from-home comforts and get 10% off for a limited time. T's and C's and exclusions apply. Dunelm, the home of homes.
Phew! Currys PC World Mega Deals are hot stuff. You can save up to £150 on Samsung fridge freezers, all with a soothing 5-year guarantee. Starting from just $379 for the RB29. Or upgrade to an American-style model with £150 off the RS8000. And chill in the heat with its water and ice dispenser. A hot mega deal for a cool $999 at Currys PC World.
Silence the squawk. Find brand new cars ready to drive away today with Auto Trader.
It had been 22 years since Dan and Tom last met, since they shared a desk in maths and played football together at lunchtime. 22 years with nothing more than a few Christmas cards and an online friend request to show for it. A 21st century eulogy for the loss of a once great friendship. Until a chance meeting outside the corner shop. On a morning they both decided to ditch the car and walk instead. Walk, cycle, discover. To the Mayor of London and TfL, every journey matters.
Welcome back, everyone. I'm Sue Herrera. Here's your CNBC News update at this hour. A victory for supporters of the Keystone XL pipeline. The Nebraska Supreme Court affirming the route's approval. Regulators approved the route almost 2 years ago, but lawsuits over permits and environmental concerns have been holding up that project. The world's first floating nuclear power plant built by Russia setting sail today in transit to the nation's Arctic coast. It sits on a platform that carries 2 nuclear reactors. The project is coming under fire by environmentalists who say it is unsafe, and they call it a floating Chernobyl. NASA images picking up the record number of Amazon rainforest fires. World leaders are expected to take up the issue at this weekend's G7 and urge Brazil to take aggressive steps to fight the fires. And Long Island residents surveying the damage from a line of thunderstorms that tore through the area last night. WNBC is reporting thousands are still without power in Suffolk County. You are up to date. That's the news update this hour. Ty, I'll send it back to you.
Sue, thank you very much. Let's take a look, shall we, at where we stand right now in the markets, if you're brave enough. The Dow is down about 500 points on the nose as we wait for the president's announcement predicted for later today on the escalating trade spat with China, which he said he would make a statement or do something this afternoon. The S&P 500 is off about 2%, and the NASDAQ Composite, the worst of the bunch, down 2.5% at 77.85. Oil market closing for the day. Rahel Solomon is covering the action at the commodity desk. Rahel.
Hi, Tyler. Another victim of the trade escalation today. Oil prices, take a look. U.S. benchmark WTI is set to settle around $54.24 a barrel, down 2%. Brent, not much better, down 0.8%, $59.44 settling a barrel. So oil prices fell 3% after China announced it's slapping retaliatory tariffs on $75 billion of U.S. goods. Also weighing on prices today, a closely watched report from Baker Hughes that said that U.S. energy firms this week cut the most oil rigs in about 4 months. So that count is considered an early indicator of future output. And also another factor, the continued tensions in the Middle East. So you put all of those things together, and what you get is a sense of what traders are really concerned about. Melissa, I'll send it back to you.
Rahel, thank you. Rahel Solomon. The president's attacks on China overshadowing his attacks today on Fed Chair Jay Powell, tweeting earlier, "My only question is, who is our bigger enemy, Jay Powell or Chairman Xi?" What did Powell say to get that response from the president? Steve Leisman is live at the Fed Summit in Jackson Hole, Wyoming. Steve.
Yes, thanks very much. Just a couple quick news items, Melissa. The White House is saying no comment on whether the president mistook the Jackson Hole meeting here for a policy meeting where he said the Fed did nothing. We don't know if the president thought this was some kind of rate-setting meeting. Obviously, it's not. And no comment from a Federal Reserve spokesperson on whether, on the issue of the president labeling Chair Powell as an enemy. The spokesperson declined to comment. And so what did Powell say today in his formal remarks? Well, he said the Federal Reserve will act as appropriate to sustain the expansion and that risk management is part of Fed decision making. All of this sort of teeing up a possibility of a rate cut. He said on the trade slowdown, further evidence of a global slowdown. The outlook is deteriorating, and he relates that slowdown to trade policy, saying the Fed is carefully watching these developments, things like Germany's slowdown, China's slowdown. He says the global outlook is deteriorating, and trade policy is playing a role there. Finally, he says monetary policy cannot provide a settled rule book for international trade. Maybe some pushback there to the president that the Fed can't fix all that's happening because of trade, though he does say the Fed can adjust policy for trade policy developments. He does say that the U.S. economy or the economic outlook is favorable, and he compares this to 95 and 98 when the Fed did 3 rate cuts at each time. Take a look at the Fed funds futures here. It's kind of interesting. They have moved up, but much more in response. There was some reaction to Powell's speech. The bigger response here clearly from the back and forth between China. 74% chance now of an October rate cut. Obviously, that September rate cut has been dialed in. 53% chance above the 50% line now for December. So you could say the market is now baking in 75 basis points of cut. But a lot of that, again, in reaction to what happened with trade and the president's comments, more so than the Fed chairman's. Oh, I just want to tell you about what's coming up here, guys. Richard Clarida, the Fed vice chairman, we'll talk to at 4:10. And then Mark Carney, the governor of the Bank of England, we'll talk to him at 5:30. Melissa?
Have the chances of a 50 basis point cut moved up?
Oh, I'm glad you asked me that, Melissa, because yes, it has. And I'm sorry I did not provide it. When I last looked a few minutes ago, it was up from almost zero. In fact, yesterday, there was more of a chance the Fed would be on hold than a 50 basis point cut. That's not true today. We have a 20% chance of a rate cut, a 50 basis point rate cut come September. I will also add that Goldman Sachs in a report today, again, partially based on what Powell said, but also because of trade developments, upped its chance for the September rate hike to 80%.
When you walk around the lodge out there this morning, Steve, in light of the president's comments about Chairman Powell being an enemy, what is the reaction there? What are people saying?
It's a little early yet, Tyler. During the time that